year. Prudent and Federal Bank a slip in trade post reporting third quarter numbers.
Hello and welcome to Markets Forward, your go-to show where we get you abreast with all the key data points with regard to today's trading action, and also we set you up for tomorrow. I'm Nigel, and with me as always is Bandyopadhyay. Hey Sudip.
Hi Nigel. It was the day after. Some recovery, not as strong as perhaps what the bulls would have liked, but some green.
Well, that's right. And over the next 20 minutes or so, we'll get you all the big news, the key developments on the Lal Street, as well as all the top corporate voices and events to track for tomorrow's trading session. But first up, let's just give you a quick insight about today's trade. The bull showed some fight today. We started off, in the red. We were struggling a little bit at the start of trade, but otherwise, you had banks, financials, they fought back. RBI gave that booster shot, which was much needed. And that's why you had financials, NBFCs, they saw a big rally in today's trading session. Basically, more liquidity in the system. The cost of borrowing goes down as well, and the street like that. Select mid caps, they did fight back, but otherwise it was a wobbly day. If you pull up the advanced decline ratio, you'll see that we had close to 300 stocks that were advancing early in the morning trading session. Towards the end, you had more than 1,000 stocks that were advancing, but we ended up somewhere in the vicinity of around 750 stocks that were advancing. So it was a wobbly trading session, but select mid caps, they did fight back.
No, absolutely. But having said that, if you look at the small cap screen, that index was still under a lot of pain, down about 1.8%. So that's why I said that we had a recovery, but it was a fragile recovery. And let's see, I think the big question is still out there with respect to whether global markets, particularly these tech stocks in the US, whether they have settled or not. And that answer we'll only get over the next couple of days. We'll talk about the sectors and the movers and shakers in just a bit, but financials were definitely the biggest cheerleaders of the market. So let's address that big story that, of course, came through after market hours yesterday. And this is what we're talking about, the helping hand that has come in from the Reserve Bank of India when it comes to boosting liquidity in the market. Lata is here to explain exactly what these new measures are. Lata.
That's extremely well put, Surabhi. The fact that the central bank, the powers that be, are willing to lend a helping hand, that makes all the difference in how you approach stocks. So basically, 60,000 crores will come by way of Reserve Bank buying bonds. Another 50,000 crores they're going to give as a repo. That is, they give it for 2 months, 56 days to be precise, and take it back after 2 months, when all the advanced tax shortages, etc., will be over for banks. And finally, they're also going to do FX swaps, which takes care of the shortage, the negative impact coming from the FX market, the dollar shorting. The impact is that the total comes to 1.5 lakh crore, and that was the deficit which the market was calculating that the banks will face. This is because of, the RBI's intervention. More importantly, in the fourth quarter, people also withdraw a lot of cash, usually because of the end of the Rabi harvest. More expenses happen. This is a seasonal factor. So for all this 1.5 lakh crore comes in handy. Immediately, you did see bond prices surge, so that's a bank positive. The fight for deposits goes that much lower because the Reserve Bank is going to keep money somewhat available. All this added to the positive cheer that you saw in the bank stocks. Of course, the bank results were also good, and a little bit of it overflowed into NBFC stocks. Of course, not all the blues are gone away because even now banks, when they have to hunt for deposits, if they have a, say, 3-month CD in the market, they still have to pay a high interest rate. Not all blues go away. They want to be sure that there will be enough liquidity. But for the moment, clearly, a lot of cheer.
All right, thanks a lot for that, Lata. As you said, there's a problem and you have the regulator that's addressing it. At least you like the intent out there, and we're hoping that the central government as well continues with that intent. Talking about a slowing economy, something needs to be done, and hopefully there is some commentary on that. For the time being, let's take a look at today's market action, and we have our guest with us, Jai Bala, who joins in to help us out with the technicals, and Sudip Bandyopadhyay. Hi, gentlemen. Thanks a lot for joining in. Jai, you go first, and congratulations first up. You have been a little bit cautious on this market. And that call is going right. So we're at around 23,100 odd. What do you sense? We're going to be heading a little bit higher from here before resuming that downtrend that you have been talking about?
Yeah, I would like to see the market bounce back from here a little bit, Nigel, and that will set up for a secondary shorting opportunity. And the markets have been a bit oversold, but the problem is the bounces have been weak. They're not even getting to projected resistances. The resistance projected was 23,600 to 23,800. The markets got to only 23,450. So I worry that the markets could accelerate lower if the supports at 22,600 were to break. So I don't want that to happen. That will deprive the secondary shorting opportunities. So I would like to see a bounce come through first.
Okay, all right. Stay on, Jai. We'll have more questions for you in just a bit. But let's understand today's recovery, the fact that we did see some green on the screen. And there were some stocks that were rewarded rather well for earnings and some positive brokerage notes as well. But then the broader fabric of the mid-cap and small-cap market, that is still weak. So let's go across to now Hormuz to go over the movers and shakers of the day. Hormuz.
Movers and shakers undoubtedly were the banking names, and those were the ones that actually kept the Nifty well and truly in the green despite cooling off from the highs. Most of them, be it HDFC Bank, Axis, Bank of India, continues to build on from its earnings reaction in yesterday's session, and RBL, while the others moved in one direction from the low, from high to the low, RBL Bank moved from the lows to the highs in towards the close of today's trade, ending 4% higher. Earnings reactions, there are plenty of earnings that came in towards the second half of the session, and APAR Industries ended 20% lower after its results was down already 12-13% before the numbers came out, and then extended those losses. Kaynes Tech recovered after a 20% fall, ending 11% lower. TVS Motors, a good number. Cipla, after saying that the margins are not sustainable, came off the highs, and CG Power at one point was down 10% but recovered after the numbers were announced. Real estate saw a bit of a rebound in today's session, with Sobha ending 7.5% higher, leading the pack. Most of the others cooled off from the day's high but still managed gains of anywhere between 1.5% to 3.5%. Pharma continues to bleed. It was the third day of losses for the pharma index, led by Granules, Sun Pharma. Laurus continues to decline after Friday's move after its results. Ipca and Divi's also ending at the lowest point of the day in today's session. And then there are stocks who is downside is just not showing any signs of finding a floor. Netweb Technologies is one of them, a 10% circuit today. CDSL continues to decline, as does Dixon. The stock was out of the FNO band today and ended 5.5% lower. And Anantraj, another 20% lower circuit in today's session. Back to you guys.
Okay, all right, got that, Hormuz. Thanks very much for the details over there. Well, we're talking about, parts of the market which were green. So banks definitely, in financial stocks, yes. And also TVS Motors. Now, this stock surged over 5% today after reporting what seemed like a pretty stable set of numbers for the third quarter. The motorcycle manufacturer, the two-wheeler manufacturer, saw its profit rise by about 4%. So Darshan's here with more details. So
TVS Motor has reported earnings in this challenging environment, and those earnings look better than estimates, or can say a steady set of earnings. So what has worked for the company? First, volumes were higher in Q3. Volumes were higher almost 13%. Or second part is that raw material cost on the sales have taken a sharp downtick. It was down by almost 211 basis points, and that's the reason EBITDA per vehicle has increased by 6%. But some of the factors have not worked. First, realization was in line, but it's flat both sequentially and year-on-year. Second, electric two-wheeler sales have seen a jump of 57%. Remember, it's a low margin product. Third, high margin product, that's the three-wheeler, sales of three-wheeler have fallen by almost 24%. So overall, operating numbers were better than estimates. EBITDA has increased by 17%. Revenue was higher by 10%. Margin has come at an all-time high of 11.9%. But focus would be on the commentary. What does company say about the demand going forward?
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's go across to Sudip. Sudip, TVS Motors, you want to see good set of numbers. The street believes that this was good. Your view on the stock, it's not cheap, but the street liked the performance.
Absolutely, Nigel. I think the performance was definitely much better than what was expected. And, under the circumstances, the way the overall industry is poised, I think this company is in for a good time. They are also moving very fast on the electric two-wheelers. And, they're already number 2 as far as electric two-wheelers are concerned. They're already ahead of Ola. just behind Bajaj, and things are progressing in all fronts as far as TVS Motor is concerned. The only challenge is the valuation. It's not a cheap stock. It's significantly elevated even now, and buying at these levels needs an aggressive investor. But if you have a long-term view on the market and you can wait for 2 to 3 years, I think even now TVS can be bought. I think the company will continue to perform well under the for the foreseeable future.
Okay, all right. Thanks a lot for that. Sudip, coming back to you. Well, let's talk about the other big deal. Shares of 360 One Wam. They tumbled in trade despite the wealth management firm reporting a good set of numbers. The fall was on the back of Income Tax Department's ongoing search operations in its Mumbai office. Vamakshi, she tracks that. She's joining us to fill us in with more on that. Vamakshi, take it away.
Well, absolutely, Nigel. Nothing to complain about as far as numbers are concerned, and that is because the revenue saw an uptick of 3% sequentially, came in much higher than what the analysts were expecting, and this growth was largely being driven by the transaction and brokerage income, which despite the 6% fall sequentially came in higher than the analysts' expectations. The cost-to-income ratio inched higher by 196 basis points, led by a higher employee cost as well as admin and other expenses, but the operating profit dipped by 1% sequentially, but nevertheless it was still higher as compared to what the street was expecting. The net profit was up 12% sequentially, driven by largely the other income, and overall they've announced an acquisition of B&K Securities India as well as Batliwala Karani Finserv for a total value of 1,884 odd crores. In addition to that, so the numbers were good. The acquisition also seems to bode well for the company, but Kotak Institutional Equities believes that the valuations are relatively expensive now, and therefore they've given a reduced rating target price of 1,150 rupees per share. And the other reason for the fall today is that sources to CNBC's 18 were suggesting that searches by IT officials was underway in the 361 building. So on the back of that, the stock saw a very sharp fall.
Okay, all right, got it. Thank you, Vamakshi, for that. That was 361 in limelight today. Let's talk about Cipla. Cipla reported numbers, and originally the stock had soared higher, almost 4% higher, but then it cooled off a little bit after some of the commentary started coming in from the management. We have Vinny here with the fine print of the earnings. Vinny?
Yes, so in terms of numbers for Cipla, it was a good set of numbers in Q3, better than what the street was expecting. Margins came in as a very big positive surprise because EBITDA margins were at 28.1% and expectations were just of around 25%. US sales also almost flattish is what they remained, $226 million. Expectation was $218 million, so that was a bit better than the CNBC TV18 poll. Though certain factors that they highlighted in the press conference. One, that for US, the Landroid supply issues that impacted the Q3 of the company, but they are seeing that these issues have started abating, and now by Q1 FY26 we could see these issues easing off completely for the company. So yeah, that's important to watch out for. In terms of margins, they highlighted that they're not going to revise their guidance for FY25 because only one quarter is left, but they will beat their guidance of around 25% which they had for margins. So yes, they are going to be reporting better EBITDA margins for FY25 than the guidance that they've given. Supply chain issues overall have started easing for the company. Trade business is back on track. India growth, 10% growth is what they've seen this time. They expect that to continue in Q4 as well. And in terms of launches, generic Abraxane, which is an important launch everyone was watching out for, they're waiting for approvals on that front from the US FDA, and they're hoping that this launch would come out by the second half of FY26. So all in all, good set of numbers. Commentary doesn't seem too bad as well as of now, but keep an eye out on Cipla tomorrow as well.
Okay, got it, Vinny. Thank you very much for that. Let's go back to our guests as well. Sudip, what do you think? Cipla, overall in the larger scheme of things, when at one point these export-oriented stocks were doing anyway really well because of the currency tailwind. But how would you rate Cipla looking at the numbers?
Well, I think they have done pretty well. Definitely the margin was quite impressive and surprising, positive surprise nonetheless. I think, I was talking to you yesterday, and I was mentioning that in this market, when the market is sharply falling and there is significant volatility, A, based on what's happening globally, and B, what's happening as far as domestic markets are concerned also. And under the circumstances, some of the pharma names are a good place to be in, if you are a little conservative investor. And I continue to maintain my view. And I think Cipla, Sun, Dr. Reddy's, Lupin can be a good place to be in under the current market conditions for the next about a year and a half. The performance has been good. US generic, of course, there are a lot of challenges, but still, I think things have improved quite a bit. So, that's one place which is giving these companies little relief compared to what it was, let's say, 1.5 years back. Other thing which is a bit of a concern is, US withdrawing from WHO and some of the aid to multiple drugs getting withdrawn. That's a bit of a worry, but I think there will be mechanism to counterbalance that. And, these issues will blow themselves out in a short while. So nothing to worry. It's a good bet at current level for a medium to long term.
Okay, all right. Before we let you all go, Jai, I wanted your view on the Bitcoin. That's been the best performing asset class of 2024. But you've been sounding a little bit skittish on it. Where is that one headed?
Yeah, after being bullish on it from October 2023, I'm turning bearish on it. I've still got a little more percent potential, but it's primed for a multi-month decline that can take the cryptocurrencies to somewhere close to about 49,000 to maybe even the 2018 low. At the moment, I'm still waiting for further confirmation to come through. If it were to take out 109,000, it will probably go to 120,000 and then turn lower. But the structure is such that it's completing a very large move that started from 2018. So this is how it's relevant to the equity markets and the Indian investor is that there is a signal of risk on, risk off. So the animal spirits that signals whether it's on or not through Bitcoin. So watch out for this as an important parameter.
Okay, all right, got it, gentlemen. Thank you very much for taking us through today's market action and giving us your take on some of the stocks that we've discussed. Appreciate you joining in. We do have to take a break on that note. Come back on the other side with a lot of the corporate commentary that we picked up during the course of the day and the events to watch tomorrow.
Welcome back. Well, as promised, let's get you all the top corporate voices that joined us during the course of the day. Federal Bank was under pressure on the back of Q3 numbers, which were weak. The management says the bank plans to hold off on expanding personal loans and microfinance loans over the next 2 quarters due to the current market conditions. However, the bank will continue to focus on credit cards. The management also says that the focus will be on maintaining the credit costs in the vicinity of around 40 to 45 basis points for the financial year.
Canara Bank's third quarter earnings were above estimates. Management expects recoveries worth 600 to 700 crore rupees from NCLT accounts in the fourth quarter of 25. It is guiding to surpass loan growth of 10% and deposit growth of 9% in this year. The management also says that the bank has exceeded expectations by surpassing 9 of the 13 guidance parameters that they had given out so far this year.
Next up is Kaynes Technology. The stock was down close to around 14%. Actually, it recovered a little bit from the day's low after reporting a weak set of numbers. The management says that FY25 revenue guidance has been revised down from 3,000 crores to 2,800 crores due to execution delays in Q3. However, the company has maintained its EBITDA margin guidance of around 15% for FY25, while for FY26, they expect revenues to bounce up to around 4,500 crores with the margins at over 15%.
All right, so those are the corporate details that we picked up today. Before we wrap up, it's time to look at the key events to watch tomorrow. Upasana has that list handy. Upasana.
Well, it looks like quite an eventful day tomorrow. First up, let me tell you the global economic cues that we'll be closely tracking. US will be reporting its crude oil inventories data. Mind you that the Federal Reserve two-day policy meeting is going on 28th and 29th of Jan, followed by interest rate decision. Europe ECB monetary policy meetings begin tomorrow in Germany, and Japan, Bank of Japan will be releasing monetary policy meetings tomorrow. Back home in India, Union Cabinet meeting is scheduled tomorrow morning at 10 a.m. Now let us look at the top stocks that will be on our radar on the back of the corporate action. Let us first look at the important results. Companies like Tata Motors, Bajaj Finance, Maruti, Ambuja Cements, Blue Star, Voltas will be reporting their Q3 FY25 numbers tomorrow. BPCL and MPS Limited will also be in focus as both these stocks go ex-dividend tomorrow. Technopack Polymers will be in focus on the back of bonus issue in the ratio 1:1. And Jupiter Wagons will also be in focus as board will consider fundraising via equity and debt instruments. Lastly, ITC will also be in focus as ITC hotels will be listing on exchanges after the split. And mind you that the shareholders will be owning 10 shares of ITC will obtain 1 share of ITC hotels after the demerger. And lastly, Dr. Agrawal's healthcare IPO issue opens for subscription tomorrow. So all these events will be closely tracking.
Absolutely. Looks like a packed day, Upasana. Thank you very much for that. Well, before we wrap up, let's talk about the Growth Code, a collaborative initiative between Grow and CNBC TV 18. Our mission is to equip you with the valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help traders understand physical settlement and its implications.
Physical settlement means that instead of settling the profit or loss in cash, the actual asset, whether it's shares, commodities or bonds, is delivered to the contract holder. For example, if you hold a stock option to expiry, you might receive the shares of the company instead of cash. Sounds simple, right? But for traders, physical settlement introduces many layers of complexity that requires careful planning. Let's break it down. First, there is the matter of logistics. In case of commodities like crude oil, metals or physical products, delivery involves storage, transportation, regulatory considerations. Traders need to be prepared for these practical challenges. Second, capital requirements are higher. Physical settlement requires full payment for the asset's value. For instance, receiving 100 shares of a company might mean a significant cash outflow at expiry. Third, physical settlement impacts trading strategies. Unlike cash-settled contracts where you can focus solely on price movement, physical delivery forces traders to plan their positions carefully as expiry nears. Avoiding delivery or ensuring readiness becomes a key consideration. So then the question, why does physical settlement exist? Well, it aligns trading with real economy. For instance, manufacturers need raw materials while investors might prefer actual shares, fostering a direct connection between financial markets and physical assets. For traders, physical settlement isn't just a technicality, it's a strategy shaping factor. By understanding the implications of physical settlement, you can manage risks effectively and capitalize on opportunities.
Oh my God, it's a sudden walk.
Yeah, the Grow Code. That guy is